The path for you to be good at this is there, but that's only if you're willing to put in the work to create a system that can be back tested and repeated. Look at this, it's so perfect, you literally cannot make it up. Look how precise this is. Once you see it, you can't unsee it. Wow, would you look at that? Ain't that something? Any time frame, any ticker, it does not matter. The market is just one big, beautiful Mando model. That's all. All right, what's going on, everybody? Good morning, good morning, good morning. If you can hear me, please drop something in the chat so I know everybody can hear me, and we will get going. Thank you all for joining this morning. I hope this is insightful. I'm going to be doing this every day. Just a quick little pre-market prep. We'll go over some market overview. We'll do some setups, some little educational tidbits that we run into across the way, and that'll lead us right into live trading. All right, cool. You guys can hear me. Also, while we're at it right now, I'll echo this throughout, but our last little segment that I have planned, drop some names. We'll rapid fire go through all of them and get ready for the day. So let's see. All streams, more saxophone. Absolutely. I know I had to get it. That song was a banger. All right, so let's do this. Let me make sure I can stream over to my charts now. Let me do this. Share the screen. Good. How's everybody doing? Good, good, good. All right. Let me come on over here. And let's go for our first little segment here. I had too much fun with these. I'll get better with the transitions, I promise. But here is our first little. See, I told you I'll get a little better at that. All right. So first off, as always, I always start on the weekly time frame. To me, it is the most important thing to kind of generate some sort of higher time frame bias. And what I mean by that is if something doesn't look clear cut, very distinguishable from a higher time frame, to me, I avoid them on the lower time frames. That to me leads to lower time or lower probability type setups, which I tend to avoid overall. So ultimately, when I do all of my analysis on whether it's a higher time frame setup, whether it's a lower time frame setup, I really want everything to click, right? And if it doesn't, guess what? I have a list of 100 names over here that I can completely go through. You know, a lot of this work does come at night, and for today it'll be, when we do these in the morning, it'll be a little more brief, but I do tend to pick out names that line up on multiple different time frames, and ideally those are the names I trade for that reason, just so I can try and ease my way into the highest probability setup. Does that mean that I'm going to be accurate 100% of the time? Of course not. Nobody is. And that was kind of the one little educational tidbit that I wanted to bring into play here today, which I guess I can lead off with. First and foremost, you're going to lose. Unfortunately, that's just the name of the beast. The most important part of, how we can deal with that is to not be afraid to take that loss, right? To me, there's a huge difference between losing and being a loser, right? Losers do not respect stop losses. Losers do not put in the time and effort to understand where that trade would possibly go wrong. So for me, I've gotten so much better with this with time, and I think everybody else can as well. But if you've gone into the charts and you've back tested and practiced, and you've seen that there are specific points where trades go wrong, right? And everybody's could be different depending on the strategy you use. But for me, if I'm using imbalances in discount of bullish ranges or bearish ranges, for me, my stop loss automatically is going to the high of the candle that created that imbalance. Why? Well, if price were to go to the high of that candle that created that imbalance, to me, that is no longer an imbalance. That is a balanced price range. And at that point, the idea for me was to trade the imbalance. If we're not imbalanced anymore, there's no reason for me to be a part of that trade. So that's where my stop loss is placed. It's so much easier when you're trading futures on the screen to just drag the stop loss. I get it. When you're in options, you have to do it manually. And I try to avoid using that generic 10%, 20% stop out. I think that's nonsense because it doesn't always line up with where exactly you are on the chart. So, but even still, with all of that, you can get a pretty good idea of where or how much your potential risk would be in a situation just by using the Greeks that the options contract would provide you, right? You can use the delta as a way to kind of ballpark, okay, if I'm risking, $1.50 here, in delta, what would that potentially be? And you're gonna have to do a little bit of math. It's not, calculus or anything like that, but you'll be able to kind of get a ballpark idea of what your potential loss would be in a situation. And I think that is extremely important, especially when there's no 100% success rate, unfortunately. And if anybody does have an indicator that gives me 100%, let me know. I'll get on it, right? But that's just the nature of the beast. In order for us to be successful at this, we got to keep our losses small and have an idea of where they go wrong. So anyways, now to lead into NASDAQ as a whole, back on the weekly chart, obviously you see right here, we got into a weekly bullish fair value gap, which is encouraging for bulls. You'll see the reaction to these weekly fair value gaps each time along the way on this stretch that we've had since late October. Okay. So every time essentially we've gotten into one, we've essentially got out of it. Okay. So here, similar situation yesterday, we bounced out of that fair value gap, and that was following, let me go down to the daily now. That was following the sweep of these relative equal lows right here into this daily fair value gap. Now, the one caveat to this is that we aren't exactly in discount of our daily range. We are most definitely not in discount of our weekly range. Okay. So at this point, I am skating a little bit more short-term, smaller time frame duration type trades on the big picture when I'm trading NASDAQ. If I'm trading an SPX or SPY, I'm keeping it much tighter for that reason, just due to the fact that it doesn't line up perfectly with my setup, the one that I tend to use more often than not. Even if we were to go down to the hourly time frame, you're going to notice that we are not in discount of our overarching bullish trend, which is all the way down here at 571. Does this mean that price cannot necessarily move higher? No, it does not mean that whatsoever. But whatever I've identified as an area in which I'm going to be extremely cautious is, and you could see right now, we got up into discount of our short-term bearish range and rejected at this point. But this is the area right in here. So you have a bearish breaker right here, and you have a bearish fair value gap on the hour that lines up with the 4-hour and also lines up with a bearish daily fair value gap. So when price is to retrace into this mark, I'm going to be extremely cautious at that point. If we are shown a close above these two little imbalances here, that's a different story. And we can look for higher prices, ultimately looking for buy side right here. But until then, I really don't have interest in this. This is a huge hurdle to climb. And until then, I'm just, proceeding with caution. Ultimately, I do think we get up into here. I know we got cut just short, but we also left behind another equal high. So one here, and one here. Okay. So that's just kind of where I'm at overall on NASDAQ. I use NASDAQ. To me, it's been a leader for quite some time. I know there's a little bit of divergence now between ES and NASDAQ. So for example, we can come on over here and look. So you'll notice that here That is a bullish fair value gap on ES. That's the futures ticker for SPY. So I use the futures tickers to chart SPY, QQQ, IWM, etc. because to me, I would like as much information as possible. What does that mean? Futures trades 23 hours a day, 5 days a week, while regular ETFs do not, right? You're going to have that, 4 a.m. little PA to 8 p.m., but you're not getting that overnight action. And overnight, you are getting trading sessions from other places in the world. So I think those specific areas can be valuable rather than just having a gap. You can be much more specific, much more tight with your risk reward in those situations. And that is why I use the futures tickers over just the generic SPX or SPY to chart these names. We can also go over here, and also worth noting, we also did not get into this bullish fair value gap here on ES, right? So my question mark of the day, I guess you could say, is do we see this weekly fair value gap prior to making that move, right? NASDAQ is already in its weekly fair value gap here. There's still a long way to go inside that fair value gap. And also by us drawing down a little bit more, bringing ES into its bullish imbalance, that would also get NASDAQ relatively close to discount of its overarching bullish range. Okay, so there are a couple of things that line up here. I personally would have liked it to get into here first prior to rejecting, so I don't think that's completely out of the picture. The one little caveat to all of this is that we made a pretty big overnight move. We do not have any red folder data, and if you haven't heard me say red folder data, what I mean by that is there's no high impact data drivers on the day. So if there are no high impact data drivers on the day, I am automatically proceeding with caution due to the fact that we are probably not going to have that enhanced volatility, which oftentimes leads to chop, leads to sloppy trading conditions. So with all of that, that is just my overall idea on what I'm game planning for NASDAQ on the day. Again, a little bit lighter due to the fact that there is no data, and to kind of compound off that, we have GDP and PCE later on in the week, Thursday, Friday. So those are red folder events. Those are high impact data drivers. And if you need like an economic calendar or something like that, I'm sure you could punch in 100 of them. I use that Forex Factory. No, I don't trade Forex, but I use that website, and they often indicate what type of event it is, whether it's a red folder event, or they'll have, I think they have like a beige and they have like an orange-ish, and that just kind of indicates the previous level of volatility off of those specific news events. So that again is just my overall idea on what I'm game planning and what I'm moving forward with today. Again, low expectations, but this kind of sets up for the rest of the week, which I think could be a little crazy, especially because last week of June, how are we going to paint this monthly candle? That's also very important, right? This month got into our bullish order block right here. So for those of you that don't know, a bullish order block is a down close candle followed by an up close candle that closes above the open of the previous. Okay, so this is a bullish order block, month's worth. Okay, so we would anticipate some sort of respect for this. See this candle right here, that black candle, the down close. We would have we would have an expectation that price would respect this and give us a little bit of upside following that. And so far, so good. But I really want to see how the end of this month paints on that monthly candle. That should offer us additional insights into what we can, consider for the summer months. I personally don't hate trading this summer. I think it's all right. The difference is it is a little bit slower, so it might weigh on your patience. But I think that's a great time for you to practice and hone in on, whatever specific strategy that you had in mind. So let's see. I'm just checking. Oh, cool. Yeah. So Trading Minds in the chat just said trading view indicator news by 2 degrees puts red folder on screen. That's cool. Yeah. So it is really nice to just have an idea of that data. I don't care what the GDP comes in at. I don't care what PCE comes at. I don't care what CPI comes at. I don't care what PPI comes at. None of that intrigues me whatsoever. What intrigues me is what time that's going to happen, because that often leads to volatility and I don't try and front run that data. I'm not a superhero. I don't try and do anything like that. So let me check. I see over here we have a comment from Red Owl. What's going on, man? Thanks for joining. What I've noticed with entries, you look for higher time frame confluence, then drill down to the 5 or 15 time frame to get your entry, then define your exit based on your Is that statement correct? Absolutely, yeah. So again, I need everything to really line up for me on a higher time frame, meaning I have to have a clear draw on liquidity. So what that means is I need to have an idea of where price is likely to go, right? And how do I identify that, right? I'm looking for pools of liquidity, and those are, simply put, identified as swing highs and swing lows, right? So it gets a little more difficult when you're at all-time highs on something, and you'll notice that I really haven't been putting out many large cap tech names when I do like charts and stuff. And the reason for that is because I really don't have a target at this point, right? Anybody who's giving you some radical target like, oh, NVIDIA 200 or NASDAQ 2400, to me, that's kind of just rolling the dice and guessing, because we've never been up there at that point. Therefore, there's no liquidity up there. So the way that I look at where we currently sit when we're at all-time highs is at some point, the music's going to stop. Those who have money to influence price delivery are going to pull money off the table. That will create our weekly imbalance, and then I'll be good to go for the downside. But until then, I really don't have any, I don't have any downside interest until I see that weekly imbalance, which ultimately we have not gotten whatsoever. So, but you're absolutely correct. Oftentimes I'll even go, especially when I'm trading options, I'll drop from, of course, and I'll show you guys when we do our last little thing here, when we go through some names where I go weekly, daily, hourly, and if all that clicks, then I'll hone in even more, right? But when I'm looking to swing something, I often leave it at the hourly. I don't go down into even a smaller time frame. When I trade futures, I'll use the same criteria, but following that hourly, because the hourly imbalances could be big. And sometimes I don't want to take all that much risk in terms of, NASDAQ's $20 a point. That could be a lot of money if you're talking about a 60 point potential drawdown. So to avoid that, that's when I drop down even lower into a smaller time frame, key in on one of those discount imbalances, and use that as the structure for my trade. Tomorrow we can go into that more. And also I want to give everybody a little homework. So tomorrow we'll go through my model in itself. That way, when we continue going here, you guys will be able to follow along. For those of you that don't know, I know a lot of you know it at this point, but so ultimately, if you're interested and you want to see how my model works, just go onto YouTube and watch. There's a few of them. You have imbalances. I believe that's like a 15-minute video. Liquidity, also relatively short. Market structure, also relatively short. And if you have those three, you don't have to be a master at all of them, but just have an idea of what they are, because I'll do it tomorrow and we'll go through it. But I want to, if you have some background information, it's really helpful. It kind of moves it a little smoother. But I'll show you how many instances my model is, MACD is absolutely not a must. No. Yeah, MACD is absolutely not a must. No, please don't put that evil on me, Ricky Bobby. Please don't put that evil on me, Ricky Bobby. You absolutely, most definitely do not need MACD whatsoever. No good. So you do not. That every time an indicator comes on, I'm just gonna play the air horn. So all right, let's go. Last but not least, because we got to get over into the group to do live trading. So last little segment here. Call it quick draw. It's just a quick rundown. We'll go through setups and we'll be on our merry way. I'm getting good with this, baby. I'm getting good with this. All right. So if you haven't already, please like and share this, whether you're watching it on Twitter, whether you're watching it on Rumble, YouTube. Like it, share it, drop a comment. Let me know what you think about this. If there's anything I could add, make it better, please do so. I'm not a baby. I can take, some recommendations and such. So let's get into some individual names. So let me scroll to the top here and see what we got, if anybody put anything. Rivian. Okay, so let's go to Rivian. Let's see. Hopefully it's updated on the weekly chart. No, it has not. So Rivian's at $16 right now. It is above this imbalance here, $16.39. I'm curious to see if it took liquidity here and got into this weekly bearish fair value gap. Unfortunately, due to the fact that the move happened overnight, this candle has yet to paint. Either way, this is creating a weekly bullish imbalance, okay? Unless you get a crazy move that brings you back down to $11, which I don't really anticipate happening. You know, is that tradable? Yeah, it could be, right? But for me personally, it doesn't really line up with my model. As you all know, I like to have a clear-cut, distinguished range, okay? So in this case, I also wouldn't really play with fire in terms of Rivian either. I know you could say, oh, well, you have a bearish range mapped right here. I personally would not be looking towards that due to the fact that our overall range and a higher time frame range, look at this. Yeah. Okay, so like 50% of our range is way higher. Okay, and if you see my model and you buy into the idea that price really does like to go to discount of that model, which is around 50%, this is absolutely not something that I'd be interested in trying to short or anything like that. So ultimately at this point here, maybe I'm a little too cautious, but I'd prefer to create some sort of imbalance, get that retracement into it. That way I have structure on both sides, where my profit target would be, where my entry would be, where my stop loss would be. Everything is well defined as a result of that. And then I can proceed from that point on. So now would be Rivian, not something I'm really all that interested in trading for today. Let's see. Baba for our boy over here, Cajun. All right, let's do it. Ready? And this is, again, if it doesn't really meet the criteria for me on the weekly, I'm just going to cut them. If they do, I'll go down in time. But here, let's zoom in. Okay. Here we go. I'm against the clock here. We're quick drawing here. Bullish imbalance down here in discount after this shift right here. Not bad, right? Everything is pretty structured. I don't really love those relative equal lows right here, but not bad. Let's see if we can go on the daily and get some more insight. Also, something I've been trying new, actually, instead of using the daily time frame, just turning it to 24 hours. That way you get the pre-market data. That's not just nonsense data. That's real price action. So I think it's valuable at the very least. So inside this overarching larger hold on, ready? Here would be your smaller time frame, low, high, discount retracement. There's your bullish imbalance. That is a gap higher, volume imbalance. There's your run for highs. See, no indicators needed. And that's it. That's our models complete. So now we move over to the daily. Okay. And again, very nice. Okay. Volume imbalance down here. We got in and we've been chilling out. Decent. Okay. So from this point, let's look and see if the hourly can give us anything more to value or to kind of justify this idea in itself. Okay. Let's see. So the first shift in structure was here. Okay. Last price run to take out this high and ultimately shift structure. So this is dangerous, honestly. I'm glad that we looked even down to the hourly. Still, we have these relative equal lows here, here, and here. You have this bullish volume imbalance right here. So that's not all that terrible, right? So I structure wise, you do have structure to this idea, right? You do have an imbalance here that you can look towards. Relative equal highs, lows are sketching me a little bit. So you have these, and these are all on the hourly. That's one. That would be two. Whoops. And why are relative equal lows, noteworthy? Well, think about it, and I'll run through this really, really quickly. I'm going to try and get a couple more in before we get off here. But what had to have happened here? Somebody had to go long, right? It's the only way we can justify that. Now, how about here? Somebody had to go long. What happened here? Somebody had to go long. What happened here? Somebody had to go long. So if that's the case, and we know that there has to be liquidity resting below here, so stops, in order for them to drive price like that, it's going to be a substantial amount of money, and these orders are preventing the previous from getting stopped out. So there are a lot of pools of liquidity down here. So while setup wise, it doesn't look too bad. Anytime I see relative equal lows, I'm a little bit more hesitant due to the fact that I know that there's a lot of liquidity that's just kind of chilling out down there. So that's Baba. Let's see. Tesla beauty. Yeah, let's go Tesla. And then I'll run through. So Tesla's solid. I'm in Tesla. So Tesla weekly starting to, come on, just give it to me, man. Give it to me. Go get these. See, these are relative equal highs too. You might say there's $7 in between. What are you talking about? There's no higher time frame imbalances in between. So following this sweep, I'd expect price to move pretty swiftly up through. Here's Tesla on the daily. Very similarly, okay, this is our most recent price run that took out this high right here from low to high. Notice how we turtle souped or swept liquidity down here as well for that jump. Ultimately, I want 198 and then I want 205. That would be ideal. That 205 brings you into a monthly and a weekly bearish imbalance and sweeps liquidity here. Okay, so yeah, I have high hopes for Tesla. But again, today I could be rather muted due to the fact that we don't have any data. Let's see. Let's keep running through. I'm going back to the top so I don't miss you. Sorry. Shopify. Okay, let's do shop. That's one that's been on my list for a little bit now. Higher time frame looks great. Bullish wise. Okay, so here's what I had mapped out on the weekly from your low to your high. Here's your discount retracement. So far, so good. You do have this big imbalance right here. And when I was in the trade last week, or 2 weeks ago at this point, I kind of let everybody know, yeah, I'm going to take some off here due to the fact that I think we can retrace down to here, which is 61. That's just another bullish imbalance. Doesn't necessarily have to, no, but I saw a place for potential rejection due to the fact that we have a mitigation block right here, and a bearish fair value gap. So there was two things lining up for me that were going to be difficult, in my opinion, to get through on one shot. And so far, I was correct, but it is kind of chilling in between. So let's see over here on the daily. Very similarly, okay, so this is what I drew out the other day for the group. So here it is. There's your little price run. Ultimately, I would like it for it to come down into here, of discount of this daily range and shoot from there. Does it necessarily have to? No, it doesn't. I favor it, and you also have relative equal lows here, so I do favor that, but doesn't necessarily mean it's going to happen. Go down to the hourly. Let's see. Here we go. We're chasing this buy side right here. Could this be a situation where we turtle soup, take a little high, and then ultimately retrace lower to get us deeper into discount? That is also a possibility, but that is Shopify. Not bad. The only thing that I don't love here is that there's a little bit of a lack of structure on the smaller time frame. Okay, let's see. Palantir. Okay, I'll tell you right off the bat, Palantir, while the setup looks fantastic, just not one that I was really interested in, and I'll explain why. Here is your Palantir setup from your low to your high. We took out these highs in the process. You got your discount retracement, ultimately running towards highs. So I do think it's going to go here to 2750. The reason I didn't trade it was because I did not feel comfortable knowing that I had these equal lows, these equal lows, and these like literally to the tick equal lows. See, why did it leave these lows? That just drives me nuts. I have some shares. I've been kind of taking profits along the way, but I do want to have some just in case we do end up making a serious move off at this point. Setup looks fine. I just hate how many equal lows it has, and that really deterred me from trading it on a more short-term options basis. But at this point, you have another bullish fair value gap here. You really don't have any imbalances above, I think 2750 comes, but at what cost? Like, it's just a little too nerve-wracking for me knowing that all of these liquidity lows are down here. So that's Palantir. Let's keep rolling. I'm sorry if I can't get to all of these, but I got 1 minute. So let's do AMD here. Ready? AMD. Boom. Okay, so higher time frame looks good. Okay, notice how we're respecting this bullish imbalance as well. We are in a breaker on the weekly time frame in discount of the bullish range, rejecting off of this bearish volume imbalance down. You'll notice I have that labeled showtime imbalance. That's a story for a different time. Here we go, AMD as well. So you'll notice we actually have a smaller time frame little shift on AMD where price got up into discount bearish imbalance and initial rejection, right? If this is bullish, which ultimately the weekly time frame would suggest, we would move up and through these relative equal highs, no problem. The only thing is, and the only reason why I'm on edge is due to the fact that I'm not so sure. This is technically a bearish setup, a very low probability one, but not, it's still a bearish setup nonetheless. So that is all the time I have. I got to go over to the group. We're going to do some live trading. So thank you to everybody who joined. I'm sorry if I didn't get to your name today. I will try and be quicker with the market overview today. I know I went a little longer due to the fact I was talking about the risk management portion of everything. So if you have any questions about anything we talked about today, shoot me a message. I'll get back to you by tonight. I will get to those additional names next time as well. But if you guys could comment, share this, please do so. I'd appreciate it. And good luck today. We'll talk tomorrow morning, same time, same place.